Hey there, we are back. It has been a few weeks. My name is Andy Green with Green Group Real Estate at Keller Williams Realty Professionals, and I am joined as always by Annie Ransom with All Pacific Mortgage.
Hello.
Hello.
Great to be back.
Yeah, it's been a few weeks now. What has it been, like 2 or 3 weeks?
Yeah, lots of camping and outdoors activity, I think, for both of us.
Exactly. I think I've been on 5 rivers this summer and had just some unbelievable experiences. So even with everything that's been going on, COVID centric, been like really social distancing to the max. going out on the river in literally the middle of nowhere. So
right, that's awesome.
Good stuff. Good stuff. Good. So because it's been 3 weeks since we've been on our show, we are going to be talking about the real estate and mortgage market and just dive into an update. The numbers came out for July, so I think that there are some super interesting stats that we'll go through. And I think more than anything, like, what are you let's just start with, what are you seeing in today's market, Annie?
Man, well, for the most part, interest rates have remained pretty stable. There's some news that I know we're going to cover in today's segment. Some big news, a big surprise from Fannie Mae and Freddie Mac. They adjusted their loan level pricing when it comes to refinances. And what that means is how expensive it is to obtain an interest rate. So a little bit of shakeup with refinances, still phenomenal interest rates. Mortgage applications are down just a bit. So I really think with COVID and this news, at least in the Portland metro area, with folks having to take schooling home for the vast majority of people, I think that's going to slow down mortgage applications just a bit until people get into the swing of knowing what it's like to have kids at home and figuring out how to school them, at least electronically, which is going to shake things up for sure. So
yeah. Well, we saw that a handful of months ago as we went into summer, and it was super challenging for our family, for some of our closest friends.
Right.
Definitely some challenges, and maybe, just maybe, people have blocked it out of their memory and they forgot how hard it was. And they're going to have a wake-up call here come early August. I think that's when, or not early August, early September. That's when school's going to be starting this year. So.
And I think the tough thing too is that earlier this year, everybody kind of went into lockdown, right? Lots of people are working from home, but now as a lot of these businesses have gone back and they're quote unquote business as usual, for those folks that have kids that would normally go to school, they're having to maneuver through all of that. It's not shelter in place, and let's hope that we don't get back to that. But I think people are going to have their hands full on figuring out this new norm for a little while. So,
yeah. Agreed. We're all figuring it out. One day at a time and one step forward.
Right?
So let's dive into this. Let's talk about what happened in the Portland real estate market in July 2020, and then we'll get into the mortgage and dive a little bit deeper into that. I know you brushed on that just a little bit. Well, let's talk about the real estate industry in general. And to start with, I'm just going to go through and pull out a few of the stats that you see on the screen here, the market action report, and then we'll talk about each one of those. So real quick, July residential highlights: new listings increased 6.8%. Pending sales increased 21.9%. So this is year over year. So we saw a 6.8% in new listings, 21.9% in pending sales, and closed sales were up 15.2%. Inventory decreased to 1.2 months. From 1.5, and that's really the biggest thing that's impacting the real estate market today, and having the biggest impact on buyers and sellers. Yeah. So we'll talk about that. Total days on market just stayed flat at 42 days on market. which is kind of surprising because and I'm seeing a lot of multiple offers in this marketplace. And if that's the case, then typically like a home hits the market, you have a showing period, and maybe it's a day, 2 days, 3 days, and then the offers start rolling in during that time period, and maybe you have five offers. So you have multiple offers, and like that's not 42 days. 42 days is over a month, and a lot of the properties that we're seeing are getting multiple offers very quickly. So maybe this is lagging, and we're gonna see some changes. But it's interesting. It's just interesting to me that the days on market is 42 days.
Yeah.
Right.
Yeah.
And then a year-to-date summary comparing the first 7 months of 2020. New listings decreased 12%. Pending sales increased 0.7%. So we're pretty flat with pending sales, and closed sales decreased 2.8%. So year over year for the first 7 months of the year, the only thing that's really changed dramatically is new listings, and it's only down 12%, which you can see in looking at the screen here for June and July. So let's say COVID hit like mid-March. It really started having an impact on people. Inventory dropped, actually went up a little bit in April, and then down, and then down again to 1.2 months. So let's see what else. Average price has gone up 3.7%. So people's equity has been safe so far, and I really don't see that changing. So what does this all mean? Let's talk about it for a minute. New listings increased 6.8%. Pending sales increased year over year 21%.
Crazy.
That's a pretty dramatic increase in pending sales.
Yeah.
Right. So that tells me that there's high demand in the marketplace. Homes, there are active buyers. Interest rates, which you're going to get into, are still ridiculously low, hovering around that 3% mark. And it's just bringing a lot of buyers off of the fence and coming into the market. And when you have new listings that are down 12% for the overall year, supply is dramatically low and demand is dramatically high.
Absolutely.
So there's a gap there, and it's not being met by the supply in the marketplace. There just are not enough homes on the market to satisfy the demand. Would you agree?
Yes, there is a ton of competition out there. But you brought up a really interesting stat. So when we first started doing these calls, we were talking about 5 out of the last 7 recessions, housing prices continue to appreciate. And that I don't remember exactly what you said, I think it was 4.1% appreciation is spot on with those statistics. A normal market is 3 to 5% each year. So despite us being in the midst of this recession and this global pandemic and all these things that are affecting the economy, to be able to say that housing is appreciating through that on average at 4.1% is pretty phenomenal, honestly, if you think about that. So for all those folks that are out there that are concerned, I just had a conversation with somebody yesterday that said, when this, fall hits and, this pandemic becomes a little bit more active as people are anticipating, what is that really going to do for housing? And these numbers that we go over every single month, I think is just a really strong indication that housing is going to come through this and going to be the stabilizer. So if you own real estate, it's one of the best investments that you could have made for yourself for times like this. And if you're thinking about it, you're sitting on the fence and you're concerned that your housing is going to decline, I think these numbers are really, really compelling to be able to show you've got an appreciating asset immediately on your hands through all of this. So,
yeah, very, very safe investment. And you're exactly right. We're seeing the stability of the market coming back, because it was very unstable in the beginning because there were a lot of questions and unknowns and fear, right? And it took about 30 to 60 days, probably somewhere in between there. So let's call it 45 days for people to start getting a little bit more of a comfort level and for the market to react whichever way it's going to react. And looking back now, it started gradually moving back to a normal market. And I believe that, I mean, we're not in a normal market by any stretch of the imagination.
No.
Because of inventory being so low and demand being so high, which we touched on a minute ago. But if you look at the overall numbers and just the health of the real estate market, we're back to where we kind of normally are this time of year.
Yeah.
So I do believe that it bodes well for people's equity and the people that either need or have really want to make a move in today's market. It's absolutely happening, and we're helping home buyers and home sellers through this every day. So
absolutely.
So let's talk real quick about selling your home in today's market, because as you look at this and you look at that 1.2 and you compare that to previous years, so this time of year normally it's 2.3 months of supply and 2.4, so we're almost at about half of the normal supply in the marketplace, somewhere around there, and there has not been a better time to sell your home than right now.
Yes.
Sellers are just in such a strong position in number one, in the equity that they have in their home. The equity in the United States housing market has never been higher. So homeowners have that equity and extremely low supply and high demand. It just means that there's not a whole lot of competition for sellers, and the best homes in the best location, the people that have done some work to get their home ready for the market, they are doing extremely well. Top dollar. And there are some little pockets too that are doing even better than just, I'd say, normal subdivisions. There's an acreage property that went on the market, I think 2 days ago. It's close in town, and it sold for about $100,000 more than the stats would show. So comparable sales, let's just call it, show $600,000. It sold for over $700,000 because the supply of close-in acreage is so low, and there's such a frenzied demand for it. Over 100,000.
Crazy.
I'm still like just scratching my head over that one. And we're seeing that in other areas too. There are select areas around the Metro Portland market that, like, you put your home on the market, it's going to sell. It is going to sell. It's going to sell pretty quickly. And I think one of the biggest questions and challenges that sellers are having in today's market is where are we going to go? And next week we're gonna go into that in more detail and talk about selling your home and how to position yourself and things that you can think of and things that you can do to successfully navigate through these crazy uncharted waters that we're in right now.
Yeah.
So stay tuned for that next week. I think that there's gonna be some really good, valuable information in there. So bottom line is still healthy real estate market. Sellers are in a super strong position. Buyers, there are serious, real challenges in the marketplace. So navigating the market as a buyer is more challenging than I've ever personally seen it, even during the last market crash in 08, 9, 10, around there. This is trickier on the buyer side of the equation than I have ever seen it. There's a lot of uncertainty, a lot of questions. I think it's holding some people back, but interest rates are so good that it's pushing even those people that are like, I'm scared and nervous. They're jumping in anyways.
Right.
So kudos to you for taking action.
Right.
So that is the real estate July 2020 market update in a nutshell. and we are going to move on to, we talked about equity. Home sellers nationwide realized a gain of $75,000 on a typical home sale, and that's up from 66. So the highest equity rates that we've seen in my lifetime.
Yeah.
And, the biggest challenges, as we've talked about, inventory levels historically low. Sellers, they just don't know where they're going to go when they sell their home, and buyers are saying, how will we find a home in today's market because of this?
Yes, that's just insanely low.
It is. I mean, you look at the past 3 years and there's nothing that's been that low. Nothing.
Right. I mean, true. But even the past 3 years, those numbers are still low, but this is insanely low.
Especially for this time of the year. In June and July,
yes,
inventory levels hovering around 1 month.
Yeah.
So basically, at the rate we're selling homes in 1 month, the supply in the whole market is going to be gone.
Right. Nuts.
It is crazy.
Mm-hmm.
Okay, so 5 tips for sellers that, based on the information that we just went over, that I have for home sellers specifically, is there. Number 1 is to reiterate, there has never been a better time to sell your home. So if you're on the fence, start having conversations and coming up with a game plan. Number 1, hire the right Sherpa. You see that picture down in the bottom left. That handsome devil is Andy Green.
I know. I should have given you my photo.
oh yeah, you went to Kilimanjaro too, and you climbed it.
I did.
I should have remembered that, and you should be on the right. So next time we have a slide like this, it's definitely going to happen. But the hiring the right person to help you navigate through this time and through such a big transaction and process is literally a make or break. In today's market. It really is, because so many agents have been licensed over the past 5 years, and none of them have experienced anything like that, like we're going through. So hiring the right agent with the right experience is paramount. Number 2, competition is at an all-time low. Number 3, contingency sale is subject to seller finding suitable replacement housing. You can write. So let's just say you list your home, and then in the private remarks to agents, you're notifying the agent, who's therefore notifying the buyers, that if somebody writes an offer on this property, then it's going to be contingent or subject to the seller finding replacement housing, so they're not going to be left without a home, right?
Yeah.
So a lot of people do not know that you can do that. It is very typical, and it's going to ensure that you're not left homeless, which is a big deal.
Yeah.
Number 4, discuss options and strategy for multiple offers. I think that would be a great topic for another discussion, and dive into all of the things that a buyer can do, or a seller when dealing with multiple offers. And then number 5 is bulletproof the transaction by having the home pre-inspected. That is where the vast majority of transactions fall apart, is during the inspection period. So if you can eliminate, or at least minimize, the risk of there being some sort of a disagreement or sticking point during the inspection period, typically when you have the inspection done and you have some of the repairs taken care of prior to listing, you've almost taken that off of the table.
Yeah.
And it has really helped me a lot in my career, navigate through transactions, and also have a more enjoyable experience for sellers, which
absolutely
is what they want.
And honestly, the buyer too.
Yep.
Yeah.
For sure. Let's move on to 5 tips for buyers. And number 1 is have a high sense of urgency. I think that is the most important thing in today's world for home buyers, is the home buyers that are sitting on the sideline going, well, I want a house, but I'm not really that motivated. Like, it's going to be really hard to win in today's market and to find the right property. It just is. So you have to have a high sense of urgency. You have to do some work. You might have to write multiple offers on different properties and go through that whole process, and then your hopes are up, and then they might get dashed against the rocks, and like you have to be emotionally ready for this too. So you have to have a high sense of urgency. You have to be emotionally ready. Number two, get fully pre-approved for your financing. So that doesn't mean just have a conversation with Annie. That means like submit your documentation, have the conversation, submit the documentation, have it reviewed, and like get a full approval. It's going to make a huge difference in whether you're going to be able to win in a multiple offer situation or you're going to be left on the sideline. And then number three, when competing with multiple offers, determine up front how much you really want the home. Like some of these homes, you're just gonna have to determine, like, are we going to be kicking ourselves for the next 5 years if we do not put our best foot forward and do whatever we can to make this work? In some cases, when there are a lot of multiple offers, you might as well not write the offer if you're not going to be competitive. Number four is be patient, know upfront you may have to write offers on several homes before finding the right one. And then, of course, as always, number five, hire the right real estate agent, because it does make a difference.
And I think it's important for buyers to know too that you want somebody who's going to be your advocate. You can walk into an open house, if that's a thing these days, and the agent that is in that open house, they of course want your business. But how can they be an advocate for you when their job is to be an advocate for the listing side? So it's really important to have your own agent. It's covered through the transaction. A lot of people don't realize that that the seller's paying for their real estate agent. So it's really, really important that you're going to have somebody that's going to be in your corner, that's going to allow you to successfully make offers, get them, your offer awarded, and that your side of the transaction is represented and there's no conflict of interest.
Yeah. I'm glad that you brought that up, because that is something that a lot of buyers don't know, is that they don't pay a commission in the transaction. It is on the seller side. So buyer representation, to have your own advocate representing you and your best interests, is free.
Yes.
I'm going to say that again. Buyer representation is free. So you can either choose an agent who may have sold 1 to 5 houses and got licensed a couple of years ago, or you can use somebody with 20 years of experience, or 10, or even 5, or whatever it is. But bottom line is somebody with experience that is going to understand and be able to navigate this time and make sure that you're, number one, able to accomplish your goals, and number two, do it as smoothly and efficiently as possible. So,
right.
Yep. So we are on to today's mortgage market.
My favorite part.
Tell us what is happening in the world of mortgages and finance.
Yeah. So I mentioned earlier, Freddie Mac, Fannie Mae. So Freddie Mac, Fannie Mae, these are the governing entities of financing. They are the ones that set the guidelines. All mortgage lenders, unless they're doing their own private portfolios, they have to adhere to these guidelines. So a lot of these guidelines have come out with COVID-19 because Freddie Mac, Fannie Mae want to ensure that their risk is minimized when issuing these loans. So one of the things that they did in order to minimize their risk was increase the loan level pricing for refinances. This means that it is a little bit more expensive to obtain an interest rate if you are refinancing, whether it's a rate and term or whether it's a cash out refinance. It doesn't mean that it's costing you that money out of pocket. It means that it's built into the pricing of the interest rate that the lender is going to issue. So a couple of days ago, we started seeing these adjustments. So if you were on the fence of refinancing and you decided to hang in there and wait it out, well, your interest rate probably just became that much more expensive to obtain. So like I've been talking about, if it makes sense, you jump on it. You don't ever want to wait around because things like this can happen. Now, folks in the lending industry and these individual banks were trying to fight with Freddie Mac and Fannie Mae because they don't agree with the loan level pricing adjustment. But again, they're the governing entities, so whatever they say goes. Otherwise, we don't issue loans. So that is something that has come around. So those cash out refinances and regular rate and term refinances, we are barely seeing them below 3% right now. You see them just above 3% in some cases, depending on somebody's overall qualifications. That was the big news that hit on Friday last week. So, but the good news is that the government has said that they are continuing to buy up mortgage-backed securities. They understand the importance of interest rates remaining low during this time. So again, until we see a mainstream vaccine, the FDA has to approve it, they've got to manufacture it, and then they've got to administer it. And all of those things are going to take quite a bit of time. So we will see interest rates remain at these lower levels, give or take. There's always an ebb and flow in the marketplace, at least for, I would say, the next probably 6 months or so. So if you are a buyer out there and you're trying to tackle this market and you are hitting a challenge at that 1.2 months of inventory, hang in there. You will be able to take advantage of these rates. Make sure your team is spot on, and you'll be just fine. One really big change that happened at the beginning of July, I've made mention of this a couple of times, is that the credit bureaus have adopted a new way of calculating FICO scores or your credit rating. So it used to be that it would be based on the circumstance. So if somebody had, let's say, a maxed out credit card, they could turn around, pay off that credit card, and get an immediate boost to their score. Now, the credit agencies are taking an average of how it is that you manage your overall debt, particularly credit cards. So if you're one that typically likes some maxed out credit, pay it down so you can turn around and reuse it again. That will potentially damage your score, and you'll begin to start seeing a decreased score over time as you shop around for goods and services. If you are somebody who pays off your credit card balances every month, right, that's the right way to utilize your credit, then you'll start to see your scores positively impacted regardless of what shows up on a balance when that credit is pulled. So really important things to be mindful of. A lot of creditors are starting to adopt these new guidelines and the new way of calculation because they are, just like Freddie Mac and Fannie Mae, looking to reduce their risk in issuing loans for goods and services. So really important. There's tons of information out there on exactly what that means for you. It's always a really, really great idea to use a credit monitoring service. Credit Karma is okay. If you are a Capital One user, CreditWise is a really great service. Or you can go directly to the bureaus themselves and get some really good information straight from the horse's mouth on what is going on with your credit and how you can improve it based on these new standards. And then, yeah.
I want to interject here real quickly. You talked to, what did you call it? Was it CreditWise?
Uh-huh.
Okay. And they just monitor your credit?
They do.
I could have used that about a month ago.
No.
Yeah, my Facebook account was hacked.
Oh, no.
Yep. And there were terrorists on my Facebook page with pictures, guns, like the whole 9 yards. And within 3 days, they had racked up $11,000 worth of Facebook ads.
Oh, my Lord.
And I did not use CreditWise. Luckily, I check my account on a regular basis, just for business purposes. And I saw all those Facebook ads and I'm like, what is happening here? And it just kept going. $11,000 later. And luckily, Capital One or US Bank did a great job, filed a fraud claim and had the money back in my account within, I think, 10 days.
Yeah.
So like credit monitoring is real. I'm gonna check that one out as soon as we get off this. So thank you for that tip.
Yeah, I think that it's really important in today's age of technology. And, I don't know about any listeners out there, or you, Andy, obviously that is a prime example. But, I'm constantly getting these updates saying, our systems were hacked into, or it's possible that there was fraudulent activity, like whether it's a retailer or Amazon or, whatever the case. And so I think credit monitoring is something that is really important. I also don't think that people realize that credit freezes are something that is available to any consumer out there as well. You can have your credit frozen. So if you're not shopping for goods and services, nobody can access your credit without your permission. And then, of course, when you do go out to shop for goods and services, you have the credit freeze removed temporarily so that somebody can pull your credit. But it just makes it so that nobody can access your information. Now, that's not going to protect them from racking up a whole bunch of, protect you from them racking up a whole bunch of Facebook ads or getting a hold of your credit information. But the monitoring services, a lot of credit cards will give you an announcement when your credit has been run. What I mean by that is if somebody uses the number for something, like I get alerts on my phone every single time my credit card is used. So that way I can monitor a lot of these things too. And, if you're out there spending, it's kind of a nice reminder to be like, quit spending so much money. But those services are all really, really great, especially when the bureaus make decisions. And, so a lot of people are so afraid of, oh my gosh, the score, they don't realize what it means. And really what that score means to a creditor, somebody like myself, I'm a mortgage lender. And what it means to me, that score is the likelihood that you will repay this debt. It lets me know how much risk am I taking on if I issue this loan. So it's really important to understand what that score is made up of in order to know what are my habits, what am I doing regularly, because everything is tied to that score. The rates that you qualify for, if you have to pay for mortgage insurance, your homeowner's insurance, your utility rates. So many different things are tied to that score, but there's such lack of education out there on how you reach the scores that you did. And so then when the bureaus make changes as to how they're calculating this information, in some cases it can be catastrophic. We've seen people's scores go down 50, 80 points just with this one small change. So, and that's a really big deal. It could push you out of the market. Of course, it can change the interest rate that you qualify for. And in some cases, it's benefiting people. We have seen increases to their score based on these changes. So obviously better is always good, but if it pushes you out of the market, that can be a pretty frustrating thing.
Yeah, for sure.
Yep. For and sure. Then lastly, interest rates, like we mentioned before, still at all-time lows. We're still seeing sub 3% interest rates in some cases. So we're remaining nice and steady despite the changes that Freddie Mac and Fannie Mae have made. So
awesome. Great stuff. I love it. Get back on that. So what does that mean? It means it's the perfect storm, doesn't it? It is the perfect storm of super low inventory, interest rates ridiculously low, high demand, and a storm unlike we've ever experienced before in my 21 years in this business. So, so be patient, people. Be patient. Put a good, solid team in place. Watch our videos, and take our advice, and you will be able to weather the storm. We're helping people accomplish their real estate goals and financial goals on a daily basis. So it is possible. So next week, we are going to be talking about why homeowners have great selling power today. We're going to dive deeper into that. We kind of went over some highlights this week, and next week we are we're going to dive in even further. So a couple ways that you can follow us: Green Group Real Estate on Facebook, Instagram, Periscope, and YouTube. All you have to do is search. And then how can we get a hold of Annie? boom. It is
All Pacific Mortgage, Facebook, Instagram. You can meet us here every, usually Monday at 12:30. And we're here to answer any questions that you have so that we can help you accomplish your goals.
Absolutely. Well, it was great being back with you today, Annie. Thanks for taking this 30 minutes out of your day to help educate our viewers out there.
Yeah, thank you.
Yep. I hope that you have an absolutely fabulous day, and we'll see you next week on Monday at 12:30.
All right. Sounds great. Thanks, guys.
Have a great week, all.
Bye-bye.